MWIDE News. MWIDE to issue preferred shares. MWIDE Construction Corp. is set to raise some 1.5 billion pesos from its issuance of non-voting preferred shares. According to its prospectus submitted to the Securities and Exchange Commission, the company will offer up to 15 million in redeemable, non-ratioable perpetual Series 5 preferred shares, with a par value of P1, and will be offered at P100 apiece. RCBC Capital Corp. has been picked as the deal's sole issue manager, lead underwriter and bookrunner. The net proceeds for this offer will be used to fully redeem the Series 2A preferred shares. In case the offer does not materialize or the funds raised from the offer are insufficient to redeem the Series 2A preferred shares, the company will use internally generated cash and other programmed funding to finance the redemption of the Series 2A preferred shares, the company said. The said preferred shares are set to be listed on the Philippine Stock Exchange in late March. Proceeds of the Series 2A preferred shares were used by MWIDE to finance various public-private partnership projects, such as the Mactan Cebu International Airport, Parañaque Integrated Terminal Exchange Public School Infrastructure Project Phase 2 and Clark International Airport. In December, MWIDE and GMR Airports International BV have closed their transaction with Aboitiz Infracapital Inc. AIC for AIC's acquisition of shares in GMR MWIDE Cebu Airport Corp. GMCAC, the developer and operator of Mactan Cebu International Airport. AIC acquired a 33 and 1/3% minus 1 share stake in GMCAC from MWIDE and GMR for a total consideration of 9.5 billion pesos. In addition, MWIDE and GMR simultaneously issued exchangeable notes to AIC amounting to 15.5 billion pesos, which will mature on October 30, 2024, and are expected to be exchanged by AIC for the remaining 66 and 2/3% plus isang share of GMCAC's outstanding capital stock. We are excited to finally consummate this transaction that will clear the runway for GMCAC's next chapter, as well as accelerate MWIDE's long-term growth aspirations. We are also looking forward to unlocking more opportunities with this venture as we continuously re-engineer our portfolio towards achieving a first-world Philippines, Edgar Saavedra, Chairman and CEO of MWIDE, said. MWIDE said it is strengthening its portfolio towards more cycle-resilient, scalable and higher growth segments. The company initially bared its intention to build several transit-centric developments in key locations across the country and ride the information technology wave through its foray into data centers. PSE index may reach 7,500 points this year, says FMIC. The benchmark Philippine Stock Exchange Index say could hit 7,500 points this year on improving investor sentiment, First Metro Investment Corp. FMIC said Wednesday. Christina Yulang, FMIC Head of Research, said this development may not necessarily take place towards the end of 2023 since the market is expected to be volatile this year. She said reaching the 7,500 mark may happen, anytime, or when the stimulus package of the government kicks in and inflation tapers off towards the end of the year. So be vigilant and do value hunting, Yulang said, adding that stock selection is key to the investment strategy for the year. FMIC said companies with low debt and high capitalization are preferred as well as those with big market share, strong cash flow and are able to give out high dividends. Stocks with exposure to themes that are linked to the basic needs of the country are projected to perform well. These themes include greater energy sufficiency, fuel security, disruptive technology, renewables and sustainability, the bank said. Yulang also advised to look for companies with very low debt. Don't forget, investors should be very vigilant because this is a volatile market. This is a high interest rate regime. Low debt is the rule, high capitalization, of course, inflation year, margins are being squeezed. Look for companies that have wide margins, that has very good margin resiliency, that can pass through the cost. Yulang said. The SE closed at 6,709.34 points on Wednesday, down by 47.35 points from the previous close. Daniel D. Camacho, the FMIC's head of investment banking, said the two firms that deferred its initial public offering last year may launch its maiden share sale this year. These are Option International Corp. and Razons Prime Infrastructure Capital Inc. Understandably, we cannot disclose some of the other names. But there are plans. I would think, though our view is, volume will be at or slightly lower this year than last. Considering that, as we all mentioned, views on inflation and rates tend to provide some caution to our issuers, both on the equity and the debt side, Camacho said. On the debt markets, FMIC said frequent issuers are anticipated to come back through refinancing opportunities but may exhibit caution in the early part of the year until there's a better picture on the trajectory of inflation and interest rates. Issuances should pick up in the second half, it added. AirAsia lands on list of safest budget carriers. Budget carrier AirAsia Philippines said on Wednesday it was recently named one of the safest low-cost airlines for 2023 by aviation rating organization airlineratings.com. AirAsia Philippines CEO Ricky Isla said the carrier received a perfect 7 out of 7 rating for both safety and COVID-19 compliance, making it one of the top 20 safest budget airlines in the world. He said AirAsia bested other local and international low-cost airlines in terms of incident records over the past 2 years, positive results of audits conducted by the governing body of aviation, and fleet age. In AirAsia, we live and breathe safety. From the challenges brought by the pandemic to the most recent incident impairing the country's communications and navigation facilities, our all-star employees have demonstrated professionalism, tenacity, and resilience. This recognition from airlineratings.com is both a reminder and a motivation for all of us to raise the bar even more in the service of all our dear guests, Isla said. The budget carrier opened 2023 with an overall load factor of 75%, which it recorded in the first 10 days of January. Katiklan Boracay topped the list of most booked domestic destinations with an 85% load factor, followed by Tacloban and Cebu. Incheon, South Korea meanwhile still is the most preferred international destination among Filipino travelers, with its flights originating from Cebu and Manila achieving a 97% and 95% load factor, respectively. Furthermore, Osaka, Japan, another preferred travel destination, is now at 75% load factor. CREIT seeking to boost rental income. Citicorp Energy REIT Corp. CREIT has tweaked its investment strategy in the hope of realizing lease income at an earlier time. An affiliate of MWIDE Corp. CREIT has dropped successful plant testing and commissioning, with stable offtake contracts for 100% of the power plant's expected generation output, in its investment criteria. CREIT said removal of the particular criteria was meant to expand and accelerate possible investments that can be folded into the company. With the revised criteria, the company will be able to realize lease income earlier as renewable energy properties can now be leased out to solar plant developers even during construction stage, thereby providing earlier income stream to the company's shareholders, CREIT said. Upon successful plant testing, commissioning and securing of offtake contracts, CREIT still has an option to purchase the power plant and lease it out to the plant operator. The revised investment criteria was approved last December 14 by the Securities and Exchange Commission. Included in CREIT's current investment criteria is for new renewable energy properties to primarily be a site suitable for solar power plants, but may include other renewable energy properties available in the market. Potential renewable properties should also be located in underdeveloped areas where the company has completed and validated the availability of resources and the potential of such area for future township developments to drive long-term appreciating land value. CREIT is the country's first renewable energy REIT. From public to private, Metro Pacific has been discussing going private even before MWIDE's rumored interest. No deal yet, but going private has been on Metro Pacific's mind for quite some time. The board and management of Metro Pacific Investments MPI has been seriously considering delisting due to its stock's dirt cheap price. This was revealed by a babbler as MPI, which is controlled by the First Pacific Salim Group and GT Capital Holdings of the Tai family, declared it has not struck any definitive agreement with anyone. Billionario.com reported on January 10 that Mitsui & Co., one of the world's largest corporations, was interested in taking up to 20% stake in MPI. In a statement to Reuters, MPI said, "We meet with many interested investors with our current portfolio given our strong and stable performance. But we have not entered into any definitive agreement with anyone." A Tokyo-based Mitsui spokesperson told Reuters, "We are aware of the report, but we decline to comment." A babbler said while Mitsui's reported buy-in was recent, MPI's latter plan to go private has long been the topic of conversation in the firm's boardroom. Going private is being talked about, but there is no firm timetable yet, babbler said. Call Financial Chief Equity Strategist April Litan said MPI was a good bet for privatization. Stock is super cheap, trading below the value of Meralco shares that it owns, implying all other subsidiaries are free. Price has also failed to go up despite share buybacks and other efforts to increase shareholder value, said Tan on Twitter. MPI surged to a 52-week high of P4.08 in early trading on January 11, but it closed down by 1% to P3.84.